I'm Out Research Market Insights video for June 22nd. Hey everyone, Willie here. Glad you have tuned in. We've reached another Thursday, which means it's time for our 3 for Thursday video series where we try to take a brief look at some of the news that's taking place in the market this week, some of the things that are driving some of the discussion, some talking points, some insight to help you navigate the markets. And today's 3 for Thursday is going to ask a question about how much is too much. Here we're looking at this from the perspective of investor sentiment and optimism. We've seen a lot of optimism come into the market lately. We'll take a closer look at what level and what thresholds we need to start thinking about switching from encouraging optimism, which is a tailwind for stocks, to excessive optimism, which might be a headwind for stocks. In context of that, look at a closer look at ETF flows. As deluge of money is the way ETF.com described the inflows into equity ETFs of the past couple of weeks. So we'll look at the data there. And then finally, think about this in context of what central banks are doing. Historically, it's taken less optimism to signal excessive sentiment when rates are high. And right now, rates aren't only still high. It looks like, based on what central banks are doing, they're going to be moving higher for a while. So we'll get into all of that as we get into today's 3 for Thursday video. So let's start with just a summary of where we see investor sentiment right now. This is data as of the end of last week. So we've got some updates to mention here, but this is a table we put together at the end of the week. A couple things to highlight. One, volatility, 13.5 on the VIX. That's not high by any stretch of the imagination. It's not the level yet that signals excessive complacency, but going back to early 2022, anytime the VIX has been below 28.5, the S&P 500 has fallen, even with recent gains, has fallen about 15% total, 25% total, excuse me. When it's been above 28.5, the S&P 500 has risen 15%. So we're still in this environment from a fear perspective, where it's not excessive fear, not something that is going to be a driver for stock prices going forward. Where we're seeing that reason for encouragement from a sentiment perspective is in the cyclical views here. Here we've seen the switch from pessimism to optimism. A couple changes to highlight, nothing dramatic. This week's Investors Intelligence bull bear spread, for example, ticked a little bit higher. It's up to about 34 now. Consensus bulls ticked a little higher this week. NAIM had downticked last week, it upticked again, no big change there. The AAI bull bear spread, that's been the biggest mover lately. Remember, we had gone through this extended period where it was more bears than bulls. Now we're 3 weeks in a row of more bulls than bears. Historically, that's not exceptional, but we haven't seen that since the bear market started at the end of 2021, early 2022. This week's data actually downticked a little bit of optimism, still more bulls than bears. From a longer term perspective, and I think this is important to keep in focus, and I mentioned this in this week's market notes, we're still at a point where investors are overexposed to stocks. Stocks are expensive. So some of this typical tailwind that we get as we move from pessimism to optimism maybe isn't going to be as powerful or as persistent as we've seen in the past. Want to take a closer look at what we're seeing from an ETF equity flow perspective. This was data as of last week. Now, when we get the latest data in, U.S. equities, $53 billion of inflows so far this year. 45 of that has been in the last 4 weeks. So we've seen, as investors have switched from pessimism to optimism over the past few weeks, we've seen this inflow of equity exposure. Still not what we saw last year, but not really the case at this point to make the argument that the rally at this point is unloved. And so what are the thresholds that we want to look at for too much optimism? Go back to our sentiment table. We've got some thresholds here to pay attention to. Just for context, 2021, we saw the II bull bear spread in the 40s. That was kind of the really peak level there, where we ran into trouble. NAIM got above 100% in 2021, and the bull bear spread for the AAI got into the 30s. So increasing optimism at this point. Generally, it'd be encouraging to see it pare back a little bit and kind of digest some of the gains, but I don't think we're at the point yet where optimism has gone from a tailwind as investors have gotten excited about the rally to a headwind where it's been too much optimism just yet. But if we're not careful, we could be there shortly. And so then that brings us to the Fed and the understanding of what central banks are still doing. Uh, the Fed itself didn't raise rates in June. That's a much publicized skip or a pause or whatever you want to label it. But 9 of 34 other central banks around the world did raise rates, and one of them, Turkey even is raising rates. They had been in kind of still in the rate cutting camp. They raised rates 650 basis points today. So now we're over 90% of global central banks have raised rates as their last move. Pretty much all of the net gains for the S&P 500 since 1990 have come when a majority have been cutting rates. And so that's still a headwind that's out there, even as people talk about perhaps getting to the end of rate cutting cycles or slowing down, or getting to the end of a rate hike cycle, slowing down the pace of rate hikes. It's going to be a while until the Fed is actually, and the other central banks are friends for stocks at this point. So where does that leave us on this beautiful Thursday afternoon in June, a day after the longest day of the year? We've got optimism rising, not yet excessive. We've got breadth that's holding in there. Technical picture is not too bad, but from a macro perspective, when we talk about liquidity, when we talk about rates, still some headwinds that don't look like they're going to be turning into tailwinds anytime soon. So that's 3 for Thursday this week. I've got several more sentiment charts if you want to dig into it in the chart pack associated with this video, so you can download that, look at some of the indicators in the table I showed there. Thanks for listening. Thanks for tuning in. We'll do this again next week, and have a great week, everybody.